Hello, Facebook family and friends. This is Thursday. This is Boss from Investor Partner Group, and we are here today to talk about Perth and the market analysis. The must watched. It is long. It is tiring. Thank you everyone for joining. I can see that there is a few people there. If you have joined us, please hit like. Please hit comment. Tell us who you are, where you are joining from. I am looking at the comments there. Also, give access to StreamYard because I can't see who the person is. Everything is well. Hello, Facebook user. That's all I can see. So please do give access to Facebook StreamYard so that I can see who is commenting there. Okay, so just a very quick brief intro before we jump into the slide pack. And mind you, there is a whole ton of information, so bear with me. Grab something. I have my own cup of tea here that I really love, so grab something with yourself while we are going through this analysis. So for those who don't know me, Moss from Investor Partner Group, I help create sustainable property portfolios without impacting your lifestyle. I do this by educating people on how to identify growth suburbs, how to do developments, how to do investment strategies, and how to improve your basic lifestyles. Now, we do collect data across 1,500 suburbs all across Australia, and identify only a handful of suburbs in each and every state. Now, we do run our own Facebook community. It's called Property Investment Australia. So if you're not there, please feel free to jump in. We all share community love, share tips and tricks, who wants to do it themselves, who are keen to learn and be part of this journey together with us. Bear with me, I can see 23 people. I'm going to add the slides, but before I do that, what are we talking about today? So of course we are talking about Western Australia in general, but the focus of today's analysis is more predominantly on Perth itself, and you would understand why we are doing a focus on Perth and not whole of Western Australia as we go through these slides slowly and gradually. So let me share the slide pack here. Now, on the right side of my screen, my right, you can see a map of Perth. You can see north, south, east, west, so that it's easier for you to understand as I talk about some of these areas. Now, Perth has always been known as the mining capital of Australia, and it's about time that Perth's position as an Indian Ocean capital is acknowledged. The social isolation that we are going through at this stage, predominantly in Perth, has allowed an innovative culture to flourish, in the world-leading capacity across science, technology, cyber, AI, manufacturing, clean energy, defense, agriculture, you name it. So there's heaps of industries that are impacting or playing its part there. Now, the government has been talking about the diversification agenda, but in order to accelerate it, they have to basically move away from this dig, grow and sell mentality. Now, of course, since 2001 to 2019-20, first the business investment has gone up and down. It's almost like being a roller coaster ride. But in the last 7 years, in 1920, it was basically the first time that Perth actually saw some increase in business investment. Now, of course, the iron ore was the major driving force, but today's session, we are going to answer 4 key questions. And as we go through slide by slide, unpack and take deeper dive into each and every stuff, predominantly we are answering 4 questions. What are those 4 questions? So the first question is Perth changing, knowing that iron ore is still driving the increased economic growth? Okay, we all know that mining boom is still driving Perth. So is it changing from there onwards? If it is changing, how is it changing? What employment, what industries are driving the change? What is government's role in driving this change? And the fourth and the most important, which is drum rolls, what does it mean for the Perth housing? And is the demand there to stay? Okay. Now let's talk about Perth in a nutshell. Okay. So Perth in a nutshell, of course, Western Australia, or Perth in specific, is something that protected Australia during pandemic. Now, the state population is well over $2.68 million. It's 10% of the nation's population, which is quite a big number. Now, knowing 10% of overall nation's population and 2.68 million, the interesting fact here is that 77% of the population lives in Perth alone, and that's why the focus is in itself on Perth. Now, the Perth used to be the city where most self-made millionaires were born in Australia. Now, believe me or not, Sydney has that title. But what's also important is that the Perth was called the 6th livable city in the world. Now, Perth alone saw about $41 billion in business investments and had the lowest unemployment rate all across Australia, around 3.8%. Now, the average weekly earnings of Perth per person is around $1,400. And this is state's number, which is bigger than Sydney. Now, this number has significantly gone up since this presentation was done, or this slide was done. And we would see what the new number looks like as of November. Okay, now Perth itself alone contributed to about $242 billion, is about 55% to nation's export, just by itself. Iron ore, minerals, lithium, LNG, and we'll talk about some of these, but this is just a nutshell. This is high level. Now, Perth's population growth has been one of the fastest state across all of Australia. And we'll dive into all of these things, as we go along. Okay, so what is the story? Okay, let's look at the high level story first as we go deeper and deeper into some of these things. So what is the high level story? Now, bear with me because I'm going to teach you basic economics or macroeconomics first before we take this ride together. So we're going to talk about the gross state product. What is a gross state product? A gross state product, similar to gross domestic product, which is basically whole of Australia. Gross state product is very focused on the state itself. It is defined as the total income generated by individuals, by firms, by companies across the whole economy for that state in the form of, say, wages, profits, other compensation. Now, this was, just for the Perth itself, was about $361 billion, around 18% of the overall national economy. Now, if you talk about, I'm going to refer gross state product as GSP going forward. So if you talk about GSP, the most noteworthy indicator is not so much the GSP in itself, but GSP per capita. Well, and considering the Western Australia's population is so small compared to overall Australia's population, the GST per capita income for Perth is about $136 or $136,000, which is about 68% higher than overall Australians' GSP. What does that mean? Well, it means that in simple terms, if the whole state's money earned in a year is divided by each person, you would each get $136,000. Whereas if you take Perth out, or if you take Western Australia out and look at Australia by itself, you would only get $80,000. That's the big difference. Now, if you look at it in a bit more detail, the story is pretty simple, and you would see this story time and time and time again. Okay, you would see this story that GSP was quite healthy, growing at around 6% to 2014, plunged to 2%, and then negative, and considerably since then. Most part of 2015-16 was well below 2%. And it has only started to uptick for this year, around 3.5%, which is nowhere close to where it was in the boom at about 8%. Okay. Now, again, I know I'm teaching you guys macroeconomics, but bear with me because we will get to the interesting parts as well. But the most important question that we are trying to answer is, where is the property market heading? Okay. So let's talk about the income. Now, the gross state income is another measure to alternatively measure Australia's economy, or Western Australia's economy, okay, which is basically the imports versus exports. Now, you're looking at a very similar trend here as well, okay? You're looking at investment boom ending, change per capita income across the state dropping significantly. Now, this fell was not only because the gross state product fell, but also because the unemployment that it created across all of Western Australia. Okay, and we'll look at some of these numbers. We'll talk about some of these factors. Now, what changes the economy went through over the last sort of 10-year horizon? Okay, we've talked about investment boom. We've talked about export boom. What does that really mean? Now, during the mining boom, the private investment was the king in all of Western Australia. Okay. All that construction of mines, roads, rails, that drove the economy and sent big checks to the government funds, okay, and significantly drove higher employment during those times. But once the mines are built, the boom basically shifted to exports. And up to pandemic, the switch from investments to exports has been a total disaster. It was basically a big S. Exports are much more erratic in nature than investments. It does not require a large number of labors. If I give you a very simple example to explain investment boom versus export boom, assume that we're building an apartment building. Okay, it takes an army of contractors to build an apartment building, but it possibly would take 2 sales agents to sell all those apartments, and that is the shift. That shift did create a lot of problems for Perth. Now, at least with the export boom, something new is happening. And that new thing that has happened, which has protected Australia, was basically the increase in iron ore prices, which basically protected all the way through the pandemic for us. Now, furthermore, you would see similar trends in slide 5 and 6, where we are looking at the changes to economy. You would see a drop in 2014, 15, all the way up to 17. And then as export rises and adds more dollars to the government, it impacts the job market. It impacts the employment. Now, the pandemic, although it impacted all over Australia, you can see that in 2020 to 2022, it significantly impacted. This is overall Australian exports that we are looking at. Interestingly, if you look at Western Australia and the exports actually went well for Western Australia. It flourished. And the core reason was iron ore, and the prices kept going up. Okay, you can see that it was basically iron ore and the Western Australia that pretty much protected all of Australia during the pandemic times. Okay, now we've talked about the macro level. We've talked about how the industry is doing. We've talked about how the exports are doing. But let's look at the industries that are contributing to some of these factors. Okay, so we know iron ore is the key, but what does the impact look like? Because this is where the data becomes interesting. Okay. Now, in terms of dollar terms, there is no surprise here. Yeah, of course, mining is off its charts, supports 47% of Western Australia. The other one is the service industry, which is 32%. Now, this is where the real jobs is. This is where the real employment is. It's not so much mining. Perth has been predominantly driven, or the underlying impact of the Perth has always been driven by the employment that it created at any given point in time. Okay, if I jump into the next slide, you would see, and we take a further deep dive into the data, you would see that it's the service industry and the manufacturing industry combined that has made the largest contribution to Western Australia's gross state product in 2021, followed by agriculture and technology. Now, from dollar terms, yes, it makes more sense that Perth has been driven, or Western Australia has been driven by mining. But when it comes to the real change in Perth, the real economic driver, you're looking at agriculture, you're looking at manufacturing, you're looking at the service industry, you're looking at healthcare, you're looking at retail, you're looking at wholesale. This service industry, the total combination of the service industry is about 25%. Followed by agriculture, which is around 23%. So all up together, between these two areas, it's about 48% of the jobs being created in Perth by these two industries. Okay, now who would have thought manufacturing? Yeah, what can Australia really manufacture is the question, and we will unpack this as we go more and more into the detail. Okay, now let's look at the next slide. So we are looking at basically Western Australia's employment by industry. Okay, this is where we are again, no surprise here. We've talked about it. Service industry is what's driving majority of these job growth. 73% of an average employment in Western Australia is driven by just predominantly the service industry. Okay, now this used to be mining, don't get me wrong, because you're looking at only September 20 and 21 data. Okay, so in prior years, of course, this used to be mining had a big impact on some of these things, but now it only constitutes towards 8.4%, and the manufacturing is another 6%. So how does this work? Keep that thought process with you. How does this work that, although mining is creating so much dollars, it's great for the country, it's great for the state, but it's not great for the people. So the confidence is not really there. So it's putting money in the bank account for the government, but it's not really driving the economy in its truest sense. Okay. Now, this is where the government's diversification plan comes into effect, okay? In order to kill the mining dependency, the government has been working tirelessly to drive and shape the Perth economy in such a way that the money made by the mining is siphoned back into the economy, okay? And there are 4 ways that the government has picked up in driving this process, or this killing this dependency. Now, the first one is still mining, which is, hello, no surprise. Why would you do that? So you're mining lithium instead of iron ore. Is that not replacing one poison with another? Well, it's not the case, and you would see that why it's not the case, and it's a lot better actually this time. The second thing is job creation. So the population increase has to be catered for. Of course, the service industry is just doing that, but the government has to do more in creating jobs. Okay. The third and the most important was in infrastructure investment. Okay, $9 billion invested in Western Australia over the last 4 years, and we'll see where exactly this money is going. Now, to caveat you out, Victoria did about $13 billion investment 2 years ago, and you can see where Victoria is heading after 2 years of this significant infrastructure investment. Perth has just basically started that journey. Now, the fourth one is the building grants to basically subdue the rental crisis. So we are going to look at each one of these factors and unpack them and understand what is happening in these areas, and then go back and answer those four questions that I originally asked in my slide. Okay. Now, how are they demystifying the iron ore dependency is the key question. Of course, the increase in prices have provided us with a great buffer, but these prices in iron ore will never or cannot always stay as high, okay? Which means that there is downward risk associated with it, okay? No one predicted that iron ore prices would hit, US $200 per ton and dropping to like $100 per ton just recently. So, that sort of craziness when it comes to or inflexibility or volatility in prices has to be catered for. You have to answer to those downside risks. The second and the most important thing is that China has clearly indicated this year that they are going to boost up the internal production from 11% to 30%. Now, we all know that there is a massive Australian dependence on China when it comes to buying iron ore. So if that happens, and if we don't kill that dependency, we would not be in a good position. And it's not something that we know, it's something that everyone knows. Okay. Now, in the next slide, so we talked about lithium, we talked about the mining. So what is happening here? Okay, so where should we put the next bets? Okay, is lithium really the new boss in town? Okay, now of course this is not a new poison, and of course you're not replacing just one mine with another. Okay, government has committed $1.5 billion investment in Australian battery production. Okay, so you heard it right. Yeah, so it's not just about mining the mines, it's also about producing. So this mentality of dig and sell is now basically expanding. It's more about not only just digging, but you have to add value before you're selling it. Okay, now there are 4 major plans that are going up there. One in Albemarle, Kemerton, Tianqi, and Vinana. So those are 4 plans that have already been advertised or are in the process of being built in Western Australia. Now the forecast assumes that Australia would be able to produce about 11% of the world's production of batteries by 2030, and 50% of the total lithium produced in the world. Now these are some really big numbers, but you can see in some of these numbers here, when you look at the chart at the bottom left and the chart on the bottom right, you can see how the numbers are growing up and where Australia is standing in some of these in these numbers. You can see lithium is almost like more than 50% right now. So of course, we have one of the biggest mines in the world. You can see on the graph on the right bottom as to how much refined lithium Australia is producing, and at the top bottom you can see the share of lithium mined on an annual basis as well. Now, this basically puts us on a map as a world leader in transitioning to renewable energy. Okay, heck, we can export energy in its truest form if we choose to do that. Okay, now what's more important is this is basically attracting investors or private investment from everywhere. Okay, just to give you a quick sort of takeaway. Yeah, so Tesla builds gigafactories everywhere, and people would have heard about, who have followed Tesla for quite some time, would have heard about these gigafactories that they've built. You know, it creates giga factories that is basically kilowatt worth of batteries that this factory produces on an annual basis. Now, Morgan Stanley has talked about this in their reports pretty openly, that they're already having conversations of putting one of these in Western Australia. Now, this is where it gets very, very interesting, okay? Now, we know that the demand for electric vehicles, or EV, and portable economics and portable electronics and major industries is going to hit through the roof in the next 10 years, okay? As we move towards this metaverse arena, there's this massive dependency on electronics, okay? But we also know that from the data that we gathered, there are two basically most important mines or minerals that Australia is producing, and that is where the bets are, okay? They're difficult to pronounce, so bear with me. One is called spodumene, okay, and the other one is basically lithium, okay? Now, the prices for these, just to quote you and get you a bit of an understanding going, yeah? At the start of 2020, they were priced at about $437 per ton. Right now, they're priced at about $900 per ton. At the end of 2022, they are about to be priced at about $1,200 per ton, okay? Lithium, or lithium hydroxide, again, their price was $9,800 per ton, going to $13,000 in 2021, expected to hit about $15,000 in 2022, okay? Now, why am I quoting these numbers? I just wanted to provide you a bit of magnitude, okay? So presently, we are producing about 300,000 ton of this, okay? The world's expected demand by 2026 is circa about 1,200 kiloton of this, okay? 50% of this is about 600 kiloton that Australia will be producing and manufacturing, okay? Now, here's the maths question, and I'm not going to give you the answer to this. If we are producing about 300,000 ton today, which is circa about $1.3 billion, how much would 600 kiloton would be, and how much money would that bring into the economy? One thing for sure, we know that it would be a billion or a multi-billion dollar industry, okay? It's still close to billion dollar industry, but it would considerably be a several billion dollar industry, okay? Why am I telling you all of these things? Now, let's look at some of these population changes, and that would basically tie the story together, okay? Now, if you look at the population change, the jobs now versus the jobs before, you could see a very similar trend, yeah? You see, when the investment boom was happening, you could see that the job market was booming, and there was a lot more construction, there was a lot more jobs, there was population growth, okay? As soon as the construction or the investment boom finished and we moved to the export boom, there was also a massive change to the population, and the population, the change increase in population significantly dropped, okay? You can see that, you know, in those red lines that are going from 2010 to 2020, there was a significant drop in the change in population, or the increase in population. It still started, it was still going up, but it wasn't going up to that sort of level, okay? Now, the answer to this is, you are only seeing a slight increase in the population numbers from 2020 onwards. Now, you know, take it with a grain of salt when I'm saying slight, it's still one of the fastest. But with this increase, the answer is this population increase going to be sustainable? Because the population increase would create the market for the property and the rental. And if it's going to stay there, that is only when the price would rise there, okay? And we would get, the answer would basically come out or pop out at the end of this session. So bear with me, okay? Next slide. So we are going to talk about the population in general, okay? So let's talk about the population in general in contrast with other states, okay? Now, if you look at the overall Perth population, it sits well above Adelaide, almost like 50% above Adelaide, okay? It's almost tracking very close to Brisbane, you can see. What's also interesting to note, as I said before, is that 77% of Western Australia population lives in Perth, okay? So from a density perspective as to how many people are there per square kilometer, okay, Perth is about fourth most dense city, well above Brisbane and Hobart, okay? So any population increase in Perth, similar to Sydney or Melbourne and Adelaide, creates a lot more pressure on demand versus Hobart or versus Brisbane, okay? And that demand refers to the household consumption, and of course it means rental, it of course means housing. The population is forecast to increase in Perth in specific faster than Queensland in the next 4 years, okay? So the question becomes, why hasn't the population increase translated into higher demand for housing? It's pretty simple, yeah? We have got that answer right away. It's a bubble story. So the demand pent up, and it pent up for as long as it wanted, and there was ample amount of supply. But as soon as that demand disappeared, the prices came back, and you could see that the prices dropped in the Perth market quite significantly. What happened between 2015, it wasn't so much that the people don't wanted houses. It's just that people were not there at all. The population demand basically disappeared. These were people who were basically moving in and out of the state continuously. For example, living in Queensland or living in Brisbane. Okay, they were basically temporarily pushing that demand up and putting the population numbers up. But those pressures almost disappeared as soon as the investment boom was over. Okay, now why are we discussing this? Well, we are discussing this because the analysis indicate that the Perth population growth this time round is here to stay. Okay, and why am I making this comment? It is here to stay because the jobs that are created have no relevance to mining. They are supported by service industry, as we saw. Manufacturing is the key component. So manufacturing, there's no working from home. You have to show up to factories. You have to show up to industries. And the government is investing a lot of money in creating jobs, whether it be directly through short-term jobs or long-term jobs through lithium mining, battery production, and in investment in infrastructure. Okay, now we are talking about jobs, so let's look at the job market as well. Yeah, and this is the last sort of 2 slides where we are going to basically see what the rental affordability, what the average weekly earnings look like, and what does that really mean. Okay, now on the left side you see rental affordability chart, and I'm going to come back to that and talk about that chart as to what does that represent. Okay, now the government has pledged over $230 million just to create short-term jobs while focusing on the long-term jobs, as I said, through infrastructure investments, through building grants, through lithium production, through battery manufacturing. Now, if you look at this already, the weekly earnings in Western Australia, as I said, was $1,400 when that chart was done. It's actually around $1,900 right now, well above Victoria and New South Wales, and it's almost on par with ACT. Okay, now the population increase now is creating this significant rental crisis that we can see on the chart on the left. Yeah, you can see the rental affordability index, even after such high average weekly earnings, is creating a rental stress. Okay, now let me explain how to read this chart, and anyone who wants access to this information, I'm happy to provide that. The way to read this chart is the less greener, the yellowish, the orange, or the reds are basically indicating the pent-up demand. Okay, now with building grants offered, around circa about $150 million, of course that's pushing people to buying more. But they'll soon see an influx of investors entering into these areas to catch up this yield, this significant yield that is just sitting there waiting to grab. Where the disconnect is that the confidence of the investors is not so much as to what happens if this population demand disappears. What are we going to do then? Okay. Now, the interesting thing here is that even if interest rate rises, the economy has enough buffer not to catch that interest rate rise, but it can also sustain it, based on these average weekly earnings and the rental affordability index that we are looking at. Okay, now let's look at the infrastructure. Okay, so the best for the last. Okay, this graph basically indicates where the state government is already spending money. Okay, now they are spending about $9 billion pledged to cater for growth and to cater for the pent-up demand. Okay, you can see similar trends. Yeah? You can see similar areas where the government is spending money to decongest the road that is coming into CBD, and what major projects are taking place. So in order for you to understand how Perth works, is there is about 200 million of Metronet that they're spending on. Now, Perthsiders love their trains. I heard someone talk about this in one of the other property investment companies that, Perthsiders hate trains and no one catches a train, everyone catches a car. Well, clearly that's not the case. If the government is spending $200 million on Metronet, but they are also spending humongous amount of money on freeway extensions like Mitchell Freeway, Hesterview Avenue, Leach Avenue, Tonkin Highway. They're putting a new health campus near John the Loop. So there's heaps of investment coming through. There's almost like $200 million towards improving supply chain, agricultural supply chain near Wheat Belt and Goldfield regions. And the most important part is they're even considering, building a new cycling infrastructure around 150 kilometers across Perth for about $146 million. So that's a lot of investment that state is doing. What does this basically translate into? So of course the state is putting this money towards construction, but it creates jobs, creates employments, it decongests the people, and the demand for population is there to stay. And that's why the state is thinking about making some of these changes in the short to long run. Okay, now the most important question that we have all been waiting for, so the pockets to look out for. Okay, and what are the key core pockets? Okay, now this is Perth again, and out of the 350 suburbs that Perth has at this stage, okay, I have shortlisted about 20 suburbs that I feel that there would be demand coming through, or there would be enough investor activity coming through to drive the prices up in those suburbs. Okay, you can see Joondalup here at the upper region. Okay, you can see Osborne Park around the inner north. You can see Canning Vale around the south, and you can see Rockingham near the Bay Area. Now, please do not just go and start investing in these regions eyes closed. Are we buying there yet? Only handful of clients. Okay, we haven't actively moved into Perth at this stage. Okay, my suggestion to all my clients is wait and watch over the next sort of 2 to 3 months, or seek advice at a much more granular level as what we are looking at for markets within market. Okay, my verdict on Perth economy that it is going to take off. Okay, it would far supersede what Brisbane and Queensland has to offer. It would be right there near where the Adelaide is going to hit. The diversification paradigm and making the Perth the new Indian Ocean capital is well progressed, and you would see some really great stories coming through in the next sort of 12 months time. Okay, now I'll take a stop here. I'll take some questions. I know there are still 30 people watching here. Anyone who wants to get hands on this piece of information, I'm happy to hand out. Please reach out to me or Sheena, or drop in the comments below, and I'm happy to share this information openly. Hope you've enjoyed the session. I will stick around. If you have any questions, comments, feel free to provide anything. My thinking has always been that let's work together in creating wealth through property investing without sacrificing lifestyle. Together is better, together is great. Let's do it so that everyone can succeed. So I'll take a pause here. I'll move to the questions, and let's see, if you have any questions, feel free to let me take myself. Who you are. Okay, so there is one question here, very interesting one. It's historically a very volatile market. It is strong by now, but had a horrible full only 5 years ago. Cyclically has many times before. I reckon it's a roller coaster, but it's a good time to get on board. Just bear in mind your capital growth can and probably will flatline for 2 to 3 years occasionally. Look, I don't disagree that it is a volatile market. It has always been a volatile market, and I think that is what's putting a lot of these people at bay. So the whole discussion that we had today was basically to prove that that volatility is coming to an end. Okay, that volatility is disappearing because that dependence on mining is coming to an end. That dependence on mining is shifting from iron ore to lithium, where we are more moving towards the production stage. So it's not just dig and sell, it's about dig, add value, and sell. Okay, now we've also looked at that job industry is predominantly controlled by service side, about 73%. So creating more jobs, pushing infrastructure, at least for the next 4 years, you will see some significant stability coming into Perth market. Mind you that as soon as investors go in that market, the homeowner is there because they are earning significantly higher average weekly earnings. They will fight with investors. They will push the prices up because, you know, they have deep pockets, unfortunately. So, and that's what you would expect to happen in Perth. Where are the battery plants located? Should that location be considered when investing in properties? No, not necessarily. Look, I mean, you know, majority of these battery plants are on magnitude of scale. Yeah, people move in and out, you know, from these battery plants. It's like, you know, I work in the city, but I don't tend to live in the city. I tend to live where it pleases me. So, you know, just actively buying there near closer to the battery plants doesn't make sense from a short-term growth or a long-term growth perspective. But you would see that there would be a lot of rooming houses coming around some of these areas to cater for the short-term rental. Okay, so when I say rooming houses, I'm talking about, you know, 3 to 6 months sort of market where, you know, people fly in from various different states to catch up for short-term demand for employment, you know. So you would see a lot of those popping up around some of these areas. You should rewind back. I've highlighted those 4 areas where these plants are coming up. Hey Moss, if you can please PM some of the slides information, that would be great. That's awesome. Yes, reach out to Sheena or drop myself and share your email address if you're happy to send that across. Hey Rex, thank you for joining in. Hey James, thank you for joining in. Lovely to have you all. How long is the Perth property cycle? Okay, how long is the Perth property cycle? It's that's almost like how long is the string, isn't it? See, you know, my understanding has always been that an average property cycle lasts at about 6 years. Okay, we have seen that those property cycles have been converging. So if you look at between 17 to 20, the property cycle was literally like 3 years, and then it came right back up. So, you know, the dynamics of those property cycles are changing as well. Now, as I said, you know, the intention is that the investor confidence would only come back up once you can see the volatility stopping. The only way the volatility would stop is by population growth to be consistently be there, which would pent up the demand. The population growth would be there consistently, or would be there on a permanent basis when the employment market is not so much connected to the mining. So could you see the reference? Again, go back into the slides, you would see what the thinking process is, what the channeling is, and it would make a lot more sense as to why killing this dependence would add a lot more stability to the market itself. That's it pretty much. I can see some more comments in. Jen Lee is saying, can the new jobs sustain Perth's $1,900 per week income, because most highest paying jobs are in mining? Okay, so again, I think this is almost like a myth. Okay, the jobs in mining, yes, true, a lot of jobs are in mining, but the average weekly earnings that you're seeing right now in Perth, or even $1,400 6 months ago, was not mining, was service industry predominantly, you know. So naturally the income levels in Perth is significantly more higher than anywhere in Australia or anywhere in the state. It's not just mining. Of course, mining pays significant amount of money, but I mean, if you look at the last sort of 3 years, the average weekly earnings still significantly higher than all of Australia, basically indicates that, you know, naturally you're getting paid more just by being in Perth. You know, that's what the normal market is. I hope you're right, but you're talking a systemic change in a short time frame, so we'll need to wait until the commodity market puts the real estate market under pressure and see how it's hold up. True, yes, it is a systematic change, but what I'm saying is a lot of this systematic change is not going to happen. It's already happened. Okay, what I'm saying is that the policy making has already been done around the systematic change that the government is intending to do. And what would happen over the next sort of 3, 4, 5, 8 years is you would see this market driving completely in a different tangent, in a completely different dynamics, where, you know, this stamp on Perth being the mining capital would change from Perth being the manufacturing capital potentially. As I keep saying, you know, this dig and sell mentality is changing. So that systematic change is not something that is going to happen from tomorrow. These policies have been in place for the last 2 years, and you can see some of that coming through, and you would see some of this confidence seeping through into the new year as well. Okay. Hi, what's your view on Morangaroo and Alexander Heights suburbs? Okay, we're not talking about specific suburbs. You know, if you want to talk about specific suburbs, please come and talk to me in general directly. I'm happy to, you know, provide you my insights or my sort of thinking about each and every suburb. Let's use this session to keep it much more generic and much more open. Okay. Look, thank you very much for listening to me. You bear with me for 43 minutes. If there is still any more questions or any more concerns, please feel free to reach out to me, reach out to Sheena, reach out to one of my directors, reach out to our group. Do invite your friends and family. If you find this useful, please do invite your friends and family to the group. It is always lovely to share my insights openly out to people, so that we can all use it for our own benefit. Thank you very much. Enjoy your holidays. Stay safe around New Year's. I know the COVID cases are rising, so be very careful, be vigilant. Keep care, keep smiling. Happy New Year, and I will talk to you guys later. Ciao.